So let's get right into it. The market right now is a complete paradox. On one hand, you've got stocks just soaring to these incredible new heights. But if you look just under the surface, there's this really strong feeling of nervousness, this rising tide of uncertainty. It's a fascinating puzzle.
And really, this is the whole story in a nutshell. You have these two powerful forces clashing, record highs and rising uncertainty. It's a real tug-of-war that honestly defined every single trading day last week, and it's creating some confusing signals for anyone trying to figure out where we go from here.
All right, so to really get a feel for this conflict, let's start by looking at the hard numbers. How did the stock market actually do last week?
Well, the market was surprisingly resilient. You're looking at the S&P 500, which is, a huge benchmark for the entire US market, and it kept on climbing. It gained almost a full percentage point for the week. That's a pretty solid performance.
In fact, that rally had so much juice behind it that it delivered this: 3 consecutive back-to-back record high closes from Tuesday through Wednesday through Thursday. There's no question the market was feeling very, very bullish.
But here's where that paradox kicks in. Even with those record highs, the expert analysis is pointing to something important under the hood. You see, while the bigger picture trend is still positive, that short-term energy, that momentum pushing the climb, is starting to get tired. The market is showing real signs of exhaustion. Which, of course, brings us to the million-dollar question, right? If things look so good on the surface, why is everyone so nervous? What is going on that's making the market feel so conflicted while it's literally breaking records?
Okay, well, the answer really boils down to a battle over one thing: inflation. And more specifically, two critical and completely conflicting reports that landed just a couple of days apart.
And this lays out the two opposing sides perfectly. On one team, you've got the Consumer Price Index, the CPI. That's what we pay for stuff. It came in nice and cool, which got everyone excited about a soft landing and maybe some interest rate cuts. But on the other team, you've got the Producer Price Index, or PPI, what businesses pay for their supplies, and it came in surprisingly hot, basically throwing a bucket of cold water on all that optimism.
Let's dig into those numbers. So on Tuesday, the CPI report comes out, and consumer prices only went up by a very mild 0.2%. This was fantastic news for the market, right? It seemed to confirm that inflation was under control and that this whole gentle economic slowdown story was on the right track. But then, just 2 days later, bam, the whole narrative gets flipped on its head. The Producer Price Index surges by 0.9%. Now, that was its biggest monthly jump since the start of the year, and a huge red flag that cost pressures are building up for businesses way before those costs ever get to us.
So with this crazy data battle raging, let's take a look at how this whole tug-of-war actually played out across the markets. How did different assets react to these completely mixed signals?
Well, for the S&P 500, all this pushing and pulling sent it into a condition that the technical analysts call overbought. Now, what does that mean? It basically means the buying has been so aggressive that the market might be getting ahead of itself, It's a signal that there's a higher risk of a pullback in the short term.
And oh man, this chart of the US dollar index, it tells the story of the week perfectly. You can just see it right here. It tests the highs on Monday, then it drops like a rock after that cool CPI report. Then boom, a massive rebound on Thursday when that hot PPI data hit, before it just fizzled out and faded into the weekend. A total roller coaster.
We saw that exact same indecision over in the currency markets, specifically with the US dollar versus the Japanese yen. It was just trapped all week long, bouncing between these key levels. It tried to break out higher after that hot PPI report, but it just couldn't do it. It failed, which shows that even the big currency traders have no idea which inflation signal to trust right now. So all of this leaves the entire market in a state of suspense, right? Everyone's desperately looking for some kind of tiebreaker. And when the market needs clarity, where all eyes turn, to the US Federal Reserve. And that's why this coming week is going to be absolutely pivotal. We have two huge events that are going to command everyone's attention. First up, we get the release of the minutes from the Fed's last meeting. And then, second, we have the really important Jackson Hole Economic Symposium, where the Fed chair is set to give a major speech. And it all really just boils down to this single question. Is the Fed going to focus more on that core consumer inflation and finally finally give a clear signal about a potential rate cut for September? That is the question on every single investor's mind. And here's why that signal is such a big deal. As you can see, the Fed has held interest rates steady, right in this exact range for the entire year. So you can imagine, any little hint that this is about to change would be a massive, massive development for the markets. Okay, let's wrap this all up. With all this conflicting information flying around, what's the one crucial thing you should take away from all this?
Here it is, plain and simple. The stock market is still in an uptrend, but it's stretched, it's tired, it's overbought. The US dollar is weak, it keeps failing to break higher. The main story right now is what you could call a soft landing with friction. The economy is cooling down, but there are some bumps in the road. And now, everything, the whole direction of the market, it all depends on what the Federal Reserve says next. And this is where it gets really compelling. Some of the deep technical analysis, like the note you're looking at here, is basically signaling that the market's big upward climb might be on its very last leg. Think of it like a 5-act play. This analysis suggests we're now in the 5th and final act, with really nothing to follow but maybe a cool-down period.
And that leaves us with one last big question as we head into this hugely important week. If the technicians are right, and if this really is the final wave of the rally, then what on earth comes after?